Happy Friday, traders. Okay, so since the war started, and it started at the beginning of March, so we're almost 1 month into this war. The biggest market move that we have seen has been in crude. So obviously, crude has spiked up to trade up towards $100 where we are at the moment. But look, the broader market has been a little bit complacent, since the war has started. Yes, risk assets and risk markets are lower, but for one of the biggest energy shocks that the world has ever seen, you'd imagine that risk assets markets should be trading a lot lower. And the reason why we're probably seeing this complacency in markets is the fact that we've talked about this before, that Trump has been actively managing the market. So we have heard from Trump numerous occasions saying that the war's going according to plan, that it's ahead of schedule, that they've won the war, and that the war would be over soon. We've also been hearing lately that Trump is now negotiating with the Iranians. So basically, Trump has been saying all the things that the market wants to hear. And so that has really stopped these markets from having violent sell-offs or panic selling. Having said that, though, it's the tide has starting to turn and change on this. In that the market is starting to question whether or not Trump is actually telling us the truth. Because this week we've heard a lot from the Iranians, and they're basically saying that there's been no negotiations, that they are not negotiating, and that the war would end on their terms. So now we've got a market that is hearing lots of conflicting statements and a lot of confusion in the market. So they are now questioning the market's complacency. So we are now starting to see markets and risks starting to roll over. We did see another headline just before market, or just as market closed overnight in the US, in that Trump was going to extend the deadline for bombing the critical infrastructure, the power plants in Iran, by another 10 days. So we did get a momentary lift in risk, and crude did sell off about $4 or $5. But that was very short-lived. We saw markets revert back to selling off, and crude back almost towards the highs of the day. And again, we heard from the Iranians saying that they did not ask for an extension. So this is where we're left at the moment. We're going into the weekend. We do have gap risk. We've got a market super confused, and a market that now is starting to really doubt Trump. So all eyes on crude. Obviously, it's the main game. As I said, crude at the moment, it's trading around about that $94, super close to $100. With gap risk coming up in the weekend, the fact that even though this delay in bombing the Iranian critical infrastructure, the power plants, etc., it is not a ceasefire. And also, obviously, crude is still not flowing. The Strait of Hormuz is not open. So I'd imagine that crude still obviously is going to be bid. And there is a good chance, again, with the gap risk, that we could trade and settle over $100. Every market is following crude. One of the markets at the moment that is also getting a lot of focus is what's happening in global bond yields. Most important bond market is the US 10-year bond market. Those yields at the moment have spiked up and trading settled around about over 4.4%. So that is not good. Before the war, they were trading down towards 4% and briefly started trading below. Once we start going above 4.5% and targeting 5%, that certainly is going to be a big negative for risk markets, and potentially, we could then start seeing markets really cascading lower in a big way. So certainly keep an eye on what's happening in those bond markets, because bond markets certainly can start breaking things. Precious metals, gold again is struggling big time, and it is struggling again with what's happening with yields. Yields a lot higher. Gold is something that yields nothing. So when yields spiking, also US dollar is bid. That's weighing a lot on gold. So at the moment, we've got gold trading around about that 4,400 level. We did see a big spike lower in gold this week, and I'd imagine if we do see those yields continue higher, crude does go towards $100. Certainly, gold is going to sell off again. Potentially, it's not unrealistic to see maybe gold target down towards 4,000 and potentially break that in coming sessions. So, not sure I want to be long gold with what's going on. In the currency front, just look, keep things easy. Aussie is a risk currency, and it does follow risk exceptionally well. And it has been now trading lower, starting to break down on the back of what's happening with obviously now the market not trading as complacent as it was before. And now we're trading a good 3 cents from the 2-year high that we made recently. So market Aussie now is trading below 69 cents. But certainly, if we start seeing risk markets sell off into the weekend, Aussie's going to follow it. But in any case, yes, weekend coming up, a lot of gap risk, market certainly nervous, not as complacent anymore, and key takeaway really is that market really is starting to doubt, what Trump is saying, whether or not it's true, and they're starting to realise that really what he's doing is trying to manage markets. So that is the risk going into the weekend. Anyway, good luck with your trades, and we will check back in with you next week.